All right, welcome to the RP Experience. I'm your host, Andrew Regenhard, and today we have one of our preferred partners, Matt Nance, with Responsive Insurance. Matt's been a partner with us going on 2 years. We're blessed to have you guys a part of the partnership, or part of the publication and the magazine, as well as at the events, and we're really excited to talk about something that's been extremely relevant in the real estate market, and that's the flood zone. And how's that changing, and how's that affecting the realtors? So welcome to the RP Experience.
Thanks for having me. I'm happy to be here.
Awesome. So, first of all, can you give an overview of what the flood zone is, the insurance in regards to it, and the changes that have been implemented so far?
Yep, absolutely. So flood zone was historically just a way to basically determine risk at some level, propensity for flood. Most notable to real estate transactions and lending, it would determine whether or not somebody was going to be required by their lender to have flood insurance. Historically, unfortunately, the National Flood Insurance Program has paid out more than it's taken in premium, and it's been billions of dollars in debt. And so that's leading up to the main topic we're talking about today, which is risk rating 2.0. And how that has changed recently, October of 21, and how they're essentially using updated data and actuarial science and everything that they can to update the pricing structure to more properly reflect a property's risk for flooding. And that is affecting us here coastally in a pretty dramatic way.
So they're a business and they weren't making enough money, and so now they got to charge accordingly.
Yeah, I mean, they call it getting an actuarial sound. Yeah, effectively, it's the government that backs it, but that's the gist of it. Yeah, it was in the hole and it needs to be accurate.
So explain what, I guess, prior to October 21, when they implemented the 2.0, explain what like the flood zone, flood insurance, maybe even cost on average home was, and now with this home example in the flood zone with 2.0, what is that going to look like?
So, yeah, great question. I think what's surprising is one of the most dramatic things we're seeing is that even in areas that were historically called preferred risk, or X zones is a common preferred risk zone, lender would not require flood. The premium was pretty much $580 to $800 a year for $250,000 building coverage, $100,000 contents. That's the max you can buy with National Flood Insurance Program. And a lot of people opted for the coverage because you still have a fair amount of flood damage outside of special flood hazard areas. We are seeing primarily in coastal parts of Collier County, especially in west of 41 coastal. Our experience has been that those premiums are now $6,000 or $7,000 for people who might opt to have flood protection. And we're seeing that 10x change is some of the most dramatic that we're seeing, like down in the South Collier County, Southwest Collier County area. Most of the country, according to data from FEMA and the National Flood Insurance Program, says that the rates are not increasing that much. And in fact, some are going down. But we are seeing dramatic changes in the coastal parts of our area.
So 2.0 is not affecting people like it's affecting us down here, right? Like the 2.0 is a national thing, right? And so the 2.0 is affecting everyone, and they're saying, well, you're not even close, so it's going down quite a bit, or possibly could go down, but the people that are actually susceptible or more susceptible, it's going skyrocket. I mean, you just said $600 to $6,000. That's an incredible increase.
It's a huge increase. And so the feedback is that most of the country has been happy with the change. You don't have to have an elevation certificate anymore. It's made that process easier. They say that they rate it on square footage and the likelihood of damage to certain homes, and they're making it more equitable. Distance to coast is a factor that they're using more. I think loss experience probably. But it's so dramatic in certain parts of our county, Collier County especially, that we've seen that I thought there was an issue with the rate based on the fact that they were saying it was going to be more accurate. When it first rolled out, I thought, they're fine tuning these or maybe there's a problem. Right. But so far it's sustained at that level. So
like it was so bad that you're like, there's an error happening. Like, there's something wrong with the system.
It surprised me how much the premium had changed. I think most people in Collier County would say, coastal Collier County would say, the flood exposure is probably more appropriately priced beyond $800, but $7,000 has been a pretty extreme change. And that's in certain pockets, certainly not everywhere, but in one particular neighborhood, we've seen that be very dramatic difference. So
interesting. So with a realtor that now has a potential buyer, right, that's coming down from these other states, what should be disclosed to this potential buyer in regards to, a house being in flood zone?
Yeah, good question. So real estate law, I don't know necessarily that the realtor needs to disclose it. I suggest that a realtor never say you don't need flood insurance, even if the lender doesn't require it, because there's an E&O issue there. I think that the important thing is that you connect or recommend your clients connect with an insurance professional out of the gate. One of the big takeaways with this new structure is that there's a glide path where they are only increasing rates at about 18% every year if there's already a policy in place. And so the highlight there for a realtor that's helping a buyer is that the seller can basically, because they have flood coverage, the new owner can benefit from that glide path. So instead of $7,000, the new owner might pay $900. And there's a dramatic difference because they're able to benefit from the fact that there was already flood coverage on that property. So if you're helping a buyer and they want flood insurance or they're required to have flood insurance, you absolutely should be asking the seller or the seller's agent, do they have flood insurance on the property? And can we get the National Flood Insurance Program policy number and the company? Because that's essentially what you need to benefit from the glide path.
So that it doesn't dramatically increase.
Exactly. It's going to continue to increase, but It could save them thousands of dollars. And that's something I can't overemphasize to realtors, and why I think it's important that they get this information, because you can add a lot of value for your client by knowing this and pointing this out to them. So.
Right. I mean, that could save thousands over the years versus just a dramatic increase, and now they're spending, instead of $800, $6,000. That's a huge savings. So how does that affect the property value with a home that changes from like not flood zone to a flood zone later? Like, what's the impact there?
So there are some newly mapped aspects when a flood zone changes that somebody can get some benefit for a period of time. Typically, if a map has just changed, we aren't. It's so new that we're not seeing a lot of map changes yet and how it's fully impacted, at least in this area that we've worked on. Maps change around the country on a regular basis. We haven't had one in Collier County dramatic since 2012. I think it's to be determined how it's going to affect property values, or if it will. I can tell you, in one particular community, new construction doesn't have the benefit of getting the policy signed over, so they're paying these new rates. People aren't typically buying the government flood program. Private flood is now becoming more common, and we have options, and we've been able to do that for people. But if they change a map and now that community is in a special flood hazard area, every lender will require flood, and no question that's going to impact how desirable the community is or how many transactions they have. Because if people know that they're going to have an extra $3,000 to $4,000 a year of insurance costs because of these changes to flood, it's no doubt going to play a role in people's decision making. So,
100%.
Yeah, and for developers, et cetera, especially in new construction where there's no benefit to signing over the old policy.
Interesting. I mean, red flags are going off if at $6,000, right? That's $500 a month extra. Mm-hmm. I mean, that's a deal breaker for a lot of potential buyers. They can't qualify for that $500 more.
Ratios or whatever. Now, I want to be very specific that, this isn't like every community in Collier County or every home west of 41, but I think the key is to connect your client with somebody who can help them know what the real numbers are, find out if there's prior flood. Those are the takeaways. Some areas are only up, $1,800, $2,000, which, is still a fair sum, but it's doable. Marco Island is another example where without prior flood, we're seeing, I worked on new construction flood for somebody and it was going to be in the $6,000 range just for the flood insurance. We were able to find some private flood there, and it's not inexpensive, but it's a better scenario in terms of premium. So hopefully you can find an agent that also has some private flood options and can walk through the different scenarios with your client.
Are you saying a lot better scenario? You're saying maybe a half half, like 3,000. You're like,
Yeah.
how much better are these private?
So
flood?
in the most dramatic examples we're seeing right now, the National Flood Insurance Program premium would be maybe $7,000, and private flood is $3,500, depending on what they want. And the other benefit of private flood, people don't realize that the coverage is pretty limited with government flood through the National Flood Insurance Program. You don't get any loss of use if you have to move out. There's depreciated value on the contents. It's capped at $250,000. So private flood can fill some of those gaps that you can't get through the government flood program.
Interesting. Now this got implemented in October. Okay?
October 1 for new policies, correct?
So how do you do you think this has affected the overall market? Do you think it has affected it or not at all?
I think it's still early. I think it's impacted it some. I mean, we certainly aren't selling nearly as many, I feel like, preferred risk policies where people would just opt for it as for the protection if the lender didn't require it before. So I think there's less people probably just doing that as a hedge. I don't know of many transactions right now where they just go, oh, we can't proceed with the purchase. The nice thing is, at least for now, until the glide path gets up to what they call full risk rate, most people that are in special flood hazard areas have flood insurance, so they're able to sign that policy over. But eventually, those policies are going to increase at 18% compounded every year until they get to full risk rate. And if they don't change the rating structure again, it's not going to be uncommon for some communities to have average flood premiums of $3,000, $4,000, $5,000. I think private flood will continue to try to find a way to innovate and fill the gap and meet the need. There's more room for margin now there for them, but that's also to be determined. So
now you keep going back to if a lender is going to require it. Can you give the different scenarios, right, of when maybe a lender would require it versus not? Yep. And then are you seeing this happen with people that are already owning the house outright? Are they really caring? Are they protecting themselves as a private only, or do you even see that?
So
maybe that's a dumb question. I don't know.
No, it's a good question because a lot of people are cash buyers, obviously.
Right, yeah.
And so they can still benefit from a seller having flood coverage.
They can still tap into that
exactly.
previous policy. Okay.
There doesn't have to be a lender to benefit from the seller having a policy. In terms of when a lender will require it, typically, if it's in a special flood hazard area, which we can do, we use a lot of third-party vendors through companies we write with to determine if it's in the special flood hazard area or not. And if it is, then the bank is going to require flood insurance. And if it's not, then they typically don't. But if the map changes, then they may come back and analyze our portfolio and require it. So,
is there a difference from special flood zone versus just flood zone?
Yeah. So I think, some people would say everything in Florida is in a flood zone. The reality is about 20% of their claims happen in areas where lenders wouldn't even require flood insurance as a national statistic. So That's why I caution realtors ever saying you don't need flood insurance or anyone.
Did you say 20%?
20% of their claims occur in areas that are not special flood hazard areas.
When they would think, oh, I'm totally fine, I'm not in the area.
Yeah, sometimes people go, oh, I don't need it, or I don't have to have it, or we're not in a special flood hazard area. So to answer your question, special flood hazard area typically means that they think statistically it has a threshold or higher likelihood of flooding every year. Typically that's 1% or over, I think is the data point. So ultimately, if it has a 1% chance every year, basically it's going to have a flood in a 100-year period. It's considered a special flood hazard area. And if it's below that, then it's not considered a special flood hazard.
So Matt, obviously we've gotten down into the weeds, pun intended, flood.
Right.
Had to throw that in there. But we really did get in depth on what's going on in the flood warning, like the flood zones and everything like that. If we were going to take a step back and kind of recap everything, and you had a chance to sit down with a realtor right now or a potential buyer, what would be some of the top key points that you'd want them to know?
Yeah. So I think the key is the takeaway about the benefit of the prior policy, at least for the foreseeable future. Like that, if I'm a realtor, that's something I want to know and talk about. I think two, realtors have to know a lot. And the best ones in my experience surround themselves with professionals that can help. So it isn't like a 20-point laundry list of here's what you need to know and do. The big takeaway is find an insurance agent that you can plug clients into or refer them to for questions. Know enough to know, hey, you're going to want to talk about this. Hey, this is something you may want to be aware of, or that there's lender financing. And then make sure you make those connections. Have coffee with that agent so you know that they know what they're talking about, and then plug those clients in so that these things can be covered, but directly with the client, and you don't have to try to remember all the specifics. So,
Henry Ford said that. He goes, I have a dial back in the day. You could push a button, right, and get any attorney, any specialist. He'd had the right people for the right job. He didn't have the knowledge, right? He used the people around him and the sphere around him. So I think that's powerful. And be humble enough to be like, I don't know the answer to that, but I have someone that I can call and get you the answer. Because look at us right now. I'm asking all these questions. I would have no clue. But yeah, lots of knowledge, Matt. I really appreciate you coming on here and explaining a little bit more in depth on what's going on in this crazy, risk 2.0. So thanks for coming on the RP Experience, Matt. We're really honored to have you on here.
Yeah, again, it's been a pleasure. Thank you, Andrew.
All of his information will be below to be able to contact you. So if anyone's got any questions, we'll have your information there. And thank you guys for joining us on the RP Experience. We're here at Venture X, and we can't wait to see you on the next episode of the RP Experience.